Hello, and welcome to episode 10 of the Life and Finances Together podcast. Today, our financial professional, Roger David, will be speaking with special guest Bob Golm of Golm Insurance Agency to learn some helpful insights about Medicare and the overall health insurance industry. Roger, tell us more about our guest today.
Well, we're here with Bob Golm. I've known Bob now, it's got to be getting close to, it's got to be close to like maybe 20 years. That's pretty close to that. With Golm Insurance, Bob's been around a long time, takes great care of our clients. So we're going to pick his brain a little bit here and have him talk to us a little bit about what's going on in the industry and give some insight into how people can, provide that coverage that they need. I mean, it's in every part of the conversations that we have with clients and we're dealing with their financial plan. There's this big question mark when it comes to health insurance and health care, especially those that are getting ready to retire. Well, how are we going to do this? What is this going to look like? Well, there's a lot of big question marks out there as it relates to that. And we're probably not going to be able to answer all those questions today, but maybe we can at least point, some of you in the right direction, right? And understand what we're dealing with when we're talking about these things in their financial plan and also in your financial plan. So, you should be talking about this. Jake and I talk quite a bit about, medical Armageddon is what we talk about. And it's kind of the worst case scenario that we build into all of their financial plans, whether it be the higher inflation rate or a higher cost coming. But as we kind of think about that, you've been doing this for what? How many years now?
40 years.
40 years?
Yeah.
So 40 years. So this guy's been through everything, just about. There's probably still some more to come. So, what do you think, Bob? With everything that you've kind of been through and you look at the industry now, where are we headed? What does it look like? We got, higher inflation, challenges with coverage. It used to be that I remember I bought a policy about 30 years ago and I think I paid like $250 a month and I had hardly any deductibles or anything. Right. Now I'm at the highest deductible paying over $2,400 a month. So, where do you see the industry going? What are the challenges? What are the things we're going to be faced with?
The health insurance business is called, now it's called Obamacare. Everybody's aware of that, and it was called the Affordable Care Act. In my opinion, it should have been named the Unaffordable Care Act. Things have changed dramatically. Now, the only way that is going to become affordable for an individual is if their income is low and they qualify for tax credits for individual health insurance. And so I talk to people on a daily basis about their situation. They're leaving their employer, they're retiring. And now I'm concerned about insurance beyond that. Depending upon age, if an individual is under the age of 65, they're not eligible for Medicare at that time, then they can purchase individual products. Now they've got some choices. They can stay with their group health insurance plan if they're more than 20 employees. Then they can do COBRA. Sure. COBRA is only up to 18 months, and I talk to people all the time. I'm 62. I'm going to be retiring pretty soon. Well, that's not going to get you to 65. But at least COBRA is an opportunity to take advantage of, and maybe the reason they would want to do that is if they're in the middle of a claim right now. They've met their deductible for the year, and I'm planning on retiring at the end of the year. Well, COBRA is not going to make you start over on your deductibles and everything, because it's just a continuation of your current plan. So then we can talk about maybe looking at individual products after they are beyond their COBRA eligibility or maybe beyond just the year they met their deductible. If you are, as an employee, considering retiring and you talk to your employer about COBRA, they know that you're leaving.
Right.
It's a red flag.
You're tipping your hand. Yeah.
Yep, it's a red flag.
Sure.
So if you don't want your employer to know that you're going to be retiring, say 3 months down the road, don't ask about COBRA until maybe you get closer to that finish line. So individual plans can be purchased either on the marketplace or off the marketplace. The marketplace is Obamacare. And the only reason you want to go to the marketplace would be if your income qualified you for a tax credit, because you're going to be able to buy the same plans whether you're on or off the marketplace. It's just the cost.
Yeah.
So like you said, you're paying $2,400 a month for health insurance for your family. Is that what you're paying?
Yeah.
That's awful. And it's not uncommon for me to see plans that are that high of a premium and the deductibles are horrible.
Yeah.
I've got this great plan I'm paying $2,000 a month for that has a $9,000 single deductible.
Exactly, yeah.
So you got to meet all this deductible, plus you got to pay all that premium. So you got to pay probably $25,000 or more in expense in that example. So, like I say, with individual plans, we can look at on the marketplace for those that qualify. If they don't, well, then we go off the marketplace. And then when we get to Medicare, there's some choices that an individual can make. I talk to people all the time about the idea of, okay, here's what Medicare is going to allow. You've got opportunities where you can just stay with traditional Medicare. I don't like that opportunity because of the fact that there's lots of holes. And then you can also do what's called a Medigap or a Medicare supplement plan. And those Medigap or Medicare supplement plans do not include prescription drugs. So you got to buy a drug card with that plan. And then the other option is called a Medicare Advantage plan. Now, when you're aging into Medicare, Medicare takes effect the first of the month that you turn 65. Or if you're disabled, it would be sooner than that. But if you're retiring, turning 65, actually you don't need to even be retiring. But turning 65, Medicare takes effect the first of the month. And then you start to pay for Part B. This year, the Part B premium is $175 a month. And next year it's going up to, I think, $180 or $180.
Is that what it is? I haven't even looked at that yet.
Yeah. Many times I have employees that are not considering retiring from work, still working. If you work for an employer of more than 20 employees, you don't have to enroll in Medicare Part B, but you can enroll in Medicare Part A. A is no cost. B is that monthly premium. If you're not taking Social Security, Medicare will send you a bill in the mail, and then you'll have to pay that premium until you start drawing Social Security.
So when you hit 65, regardless of whether if you're obviously going to take Part B and Part A, I mean, do the employers help? Do you have to notify Medicare? Do you have to go out and say, hey, yes, I'm taking it, or no, I've decided not to? I mean, is there a requirement there? Because you don't want to have these penalties for not having coverage, or at least not declaring what you're going to do.
If you're taking Social Security, you'll automatically get signed up for Medicare A and B. If
Okay.
you're still working, not drawing Social Security, or even not working and not drawing Social Security, then you have to go to Medicare's website, ssa.gov, which is Social Security Administration.gov. And I tell people, don't go to .com because your phone will blow up. But .gov, you get in there and you have to create an account. And then you can go in and sign up for Medicare Part A, Medicare Part B. Again, if you're working for an employer of more than 20, you don't need to sign up for B at this time.
Right.
But when you decide to retire someday down the road, then you have to sign up for Medicare Part B, but you have to do it on a timely basis.
Right.
So I'm retiring on the 1st of July. You want to make sure that you contact Social Security or Medicare and sign up for Medicare Part B on the 1st of July. If you retire,
Which means you have to contact them before then.
yes.
Right? You don't want to have any gaps in coverage because there's
Right.
penalties,
and you
right?
can do that about 90 days in advance. So,
Yeah, okay.
So you don't
90
want
days.
you don't want to call them on, you're leaving on July 1st, and you call them in October and say, by the way, I retired, I lost my insurance back in July. You're going to get penalized for that. So
Yeah.
you got to do it on a timely basis. But you're not going to be penalized if you have what's called creditable coverage.
Right.
And that creditable coverage says it's at least as good or better than Medicare. And most plans are at least as good or better than Medicare, even though you've got this giant deductible that you've got on your health insurance plan.
So if you're working, you work for somebody that's got more than 20 employees, are you required to contact Medicare? Should you at least do it and say, hey, I've got creditable coverage, I'm still working, I just want to let you know, or is it not even required?
Not even required.
Okay.
Yeah. If you don't want to, you don't have to. You probably should talk to your employer. Your employer might appreciate
Right.
if you sign up for Medicare Part A only. Let's say you're working for a bigger corporation that has a self-funded plan. They would prefer probably that you would have Medicare Part A, which is the hospital benefit, just in the case that you end up in the hospital.
Right.
Let Medicare pay the bill instead of the employer paying
Yeah.
the bill.
What about Medigap or the traditional Medicare supplements, right? So, I mean, a lot of times we'll look at a client's situation and say, well, if you had some chronic illnesses and there's some things there, in this initial enrollment on Medigap or the Medicare supplement, the traditional Medicare supplement, we'll tell them, well, it's probably in your best interest to enroll in that because you don't have to go through underwriting.
That's true. Yeah. It's a guaranteed issue. You've got the 3 months before the month that you turn 65, the month that you turn 65 and then 3 months after that. So there's a window of opportunity to purchase a Medigap plan without proving that you're insurable. The Medigap plans are tremendous coverage. Medicare goes first. The Medigap plan picks up normally whatever's left over under both A and B. For that person, that might be a chronic condition, what I call a user of benefits. If that person is having problems, then I'm going to suggest that yes, that's a good thing for you to do. Because if you decide to get a Medigap plan in the future, let's say 3 years down the road, I just got diagnosed with a problem, I want a Medigap plan after Medicare was effective for me, they're going to ask a whole pile of health questions and they can tell you, sorry, Raj.
Do you have to take a medical?
No,
have to go?
no
Okay.
medical physics.
Just the questions.
But just a questionnaire, but they could say, sorry, Raj, you got something going on. We're not interested in doing business with you.
Right.
The Medigap plans don't cover prescription drugs, so you have to buy a drug card on top of the Medigap plan. Those plans are also age rated. So as you get older, the cost of those plans go up. And they may start out in the neighborhood of $150 a month when you turn 65. But then I had a person in my office who was 80 years old and paying almost $400 a month for a Medicare supplement. So the cost is going to continue to go up and up and up to the point where the Medicare Advantage plans do have a maximum out of pocket on an annual basis that you could pay in the worst case scenario. I mean, if you had in and out of the hospital, maybe to a nursing facility, going through rehab, surgeries, all sorts of things, and it's going to be a miserable year for you to hit that maximum out of pocket. But they do have that maximum out of pocket, and if you said, hey, if I just go 2 or 3 years with low claims or no claims, I've saved back enough premium to cover that worst case scenario forever.
Yeah. Wow. What's the advantage of the Advantage plan over the Medicare supplement? Are there any limitations? I mean, one of the things that people will say is like, well, if I get a supplement, I can go wherever I want to go, get healthy at Cleveland Clinic, Mayo, or whatever, and maybe I have some limitations on an Advantage plan. Is that even true?
Well,
or have you seen that?
Medicare plans, Medigap plans, allow you to go to anyone who participates with Medicare. Now, I specialize with Priority Medicare, and they're a Medicare Advantage plan. Their network in and around West Michigan is tremendous. However, Priority Health Plan allows you to go to anybody outside of the state of Michigan, actually outside of the lower peninsula of Michigan, any place in the United States, as long as they participate with Medicare. So you can you can go to that Cleveland Clinic. As long as they participate with Medicare, the Medigap plan is going to have the same rule. Well, sure, you can go to Cleveland Clinic. Do they participate with Medicare? Probably do. It's very difficult to find a provider throughout the United States that says, no, I don't participate with Medicare. So Priority Health, their Advantage plan, allows you to do that. It allows you to go to other providers just as long as they participate with Medicare.
Bob, what about clients that they go away to Florida, Arizona, or someplace for the winter, right? So we've got a lot of clients here in Michigan that they'll do that. Are there any limitations or anything you need to be aware of when you're in another state? God forbid if something were to happen, they get sick down in Florida, Arizona, and we got this Priority Health policy they purchased up in Michigan. Anything they have to worry about there?
They got to go to a participating Medicare provider. Actually, not a participating, just a Medicare participating provider. And they're able to go for that treatment.
When you're looking at, open enrollment's coming up. October 15th to December 7th. I think I got the dates right. As clients kind of go through this, as people go through this, what are the factors that they should maybe consider in saying, hey, do I stay with where I'm at right now, or do I go to another plan, to another company? Are there certain things that they should be considering, or at least as their agent let you know about? Certain things that maybe would change who you work with as far as the insurance company and or things that could affect their coverage?
As an elite agent with Priority Health, most of my business is done with Priority Health. However, Priority Health does offer like 8 different products.
Sure.
And so there's times when an individual might say, hey, this plan's a little bit less out of pocket for me. I'm going to switch over to this plan. You can do that during the open enrollment. There are no health questions asked, and it picks up all pre-existing conditions, but it wouldn't be effective until the 1st of January. So you've made that decision to make a change. Now you're stuck on that change decision that you made for the rest of the year.
Yeah.
But it's not a bad thing. It's just that here's what the plan is. This is what it's going to do for me, and I'm satisfied that I'm going to be covered this way all year long. The insurance company does come back during the open enrollment each year saying, here's what the changes are going to be for next year. So they might say the copay for, I'm just making stuff up, for a doctor's office call was $10 this year, and next year we're reducing it to $5.
Right.
But they can't do that midstream.
Okay. I mean, formularies, different prescriptions, things like that. I would imagine those different plans, like when you mentioned that Priority Health, I would imagine maybe ones that have maybe a higher premium, right? Or I don't want to say this, are better coverage plans than others.
Not really,
Raj.
What they do is they have a formulary. Each company has their own formulary, and that formulary applies to all
of
plans.
it.
Okay. So they're not going to say, "Oh, this is the better one." Now this year, there's included with the drug card is the donut hole. Everybody's heard that term, and that said that if you got to $8,000 in out-of-pocket expense, you've hit the donut hole. Then you get into catastrophic coverage. But next year, the donut hole is disappearing, and the most that you can pay in a year for your prescriptions next year is $2,000.
Wow.
So they've changed how they're covering that. Generic drugs are covered very nicely, whereas brand name drugs are going to be covered probably more like at 75%. You would pay 25%, but when you get to that $2,000 cap, then you're in 100% coverage for the rest.
That's
of
on
the
the
year.
Part D you're talking about.
Under Part D. Yeah, and Medicare Advantage plans are a package deal, so they include A, B, and D all together. And like you said earlier, Priority Health and other carriers also have zero premium plans. You pay nothing for that. Whereas with the Medigap plan, the Medicare supplement, those are the same. You'd have to purchase a drug card. In my opinion, the standalone drug card is not as high quality as the one that's included in the Medicare Advantage plans. Yeah.
When you look at these zero premium, right? I mean, how does that happen?
Yeah.
I mean, how does it get to zero premium? We get that question all the time, like, Raj, it's too good to be true, right?
Yeah.
This is like a computer scam where a virus is trying to trick me into something.
Well, let me tell you, Medicare pays the insurance company to take over as your Medicare provider. I don't know what the number is, but I know it's hundreds, maybe even $1,000 per person per month that they pay the insurance company to take care of you.
Yeah.
So if you decide, I want that zero premium Medicare Advantage plan, there's no way the insurance company is able to pay the bills with zero premium.
Right.
And they're going to do their best to keep you healthy. They want you to stay healthy. They include things like a gym membership. They have individuals that will contact you if you're a chronic case, and they might say, hey, we noticed that you haven't purchased your prescriptions in the last couple of months. What's going on? We need you to stay on those drugs because we want you to be healthy. Medicare rewards the insurance company for a healthy block of business. So they give them more money if you're not making claims.
Yeah. So they do a pretty good job managing on the private sector over there.
That's exactly it.
To make that happen.
It's all about healthcare management. I mean, cost containment. They get things, people talk about, oh, yeah, they made me go through pre-authorization or whatever. Well, that's true.
Yeah.
They want to make sure that the surgery that you might be having is the best possibility, the best result. We want the best results. Maybe there's something, maybe we could put you through rehab first before we do a surgical procedure.
Right.
And I think most people are going to agree, yeah, I think I'd rather have rehab first before I go through that surgical
We've
procedure.
had docs take that approach with a lot of clients.
Yeah.
Like, Raj, I don't know if I'm going to have this back surgery. They're going to put me through physical therapy for a little while and see how that goes before we actually do it. So, I mean, that makes a lot of sense.
It does.
It's really interesting to see. I mean, there's so much talk now about the trust fund, the Medicare trust fund, going to zero in 2028 or somewhere around, that period of time. It's one of the things that keeps us up at night, right, as financial advisors for our clients, but also for our clients saying, hey, what is that going to mean? What is that going to look like? I mean, do you have any take on that? What do you think?
I can't imagine Medicare failing. And I'm confident that the federal government's going to figure out a way to fund that trust fund.
It'll probably be higher premiums.
There's too many old people that are voters that.
Yeah, that's true. That's true. And you don't get reelected if you're not taking care of your business when it comes to those older voters, right?
That's exactly right.
Yeah, all the baby boomers, they're all just about retired now. Yep. So. Well, that's some really good insight. If people are in open enrollment, they have an Advantage plan right now, and they don't necessarily want to switch. Do they need to do anything?
No, their plan automatically renews, and they don't need to do anything. That's the nice thing about the open enrollment opportunity. But there is that window that they can make a change should they want to, maybe have a different drug card. There's a plan that might be offered, but it has a little bit lower copays for prescriptions or whatever it might be.
So they're going to want to take a look at, what's going on with them personally to figure out if it's still the right plan. I mean, like you said, even Priority Health has a number of different plans. They may need to reassess and see where they're at.
Yeah, most of my clients, the plan that they're on, they're very satisfied with it. And I would say a very big majority of those just automatically renew it on an annual basis and just say things are good.
Okay.
With those people that, we're talking about open enrollment, but many times when we got somebody aging into Medicare, they don't have to wait until, and I get people asking me all the time, I'm going to be turning 65 and I'm going to be eligible for Medicare. I know the open enrollment's coming up. It doesn't apply to you. This is a qualifying event for you to come in at any time. So if it happens to be my birthday is in March and I'm turning 65, March is your date. So you've got the opportunity to sign up for a plan. So that qualifying event, and that person that might be losing group health insurance because they're retiring, that's a qualifying event. Even though they might be over the age of 65, it still gives them an opportunity to get into another plan. But they got to do it on a timely basis.
So one of the things too is you got to plan ahead.
Yes.
Don't wait till the last minute where you could end up having gaps in coverage. You're going to want to plan ahead. So if you're retiring and you know that date, and even if it's on your 65th birthday, was it 3 months before you turn 65, the month you turn 65, and then 3 months after, if you're going off of the actual date.
Yeah.
Right.
That's true. That's true. Now. But the cool thing is that if somebody were to call me and say, hey, I'm planning on retiring on November 1st, and I can't get together with you until the 31st of October, well, as long as we get together that day, I can get a plan effective the next day. Now,
can you really do it that fast?
Yes. But you're not going to have a card in hand by the 1st of November.
Okay.
But most people don't do that. I mean, they're planning. I'm thinking of. I get people calling me all the time. I'm planning on retiring 9 months from now. Well, that's a little bit too soon. But at least I can give you some ideas. Now, the problem with that is that I don't know what the plan changes will be for next year if you're calling me, 9 months in advance.
Yeah.
But I think that if you're able to give yourself, 2-3 months, then it's very easy, very comfortable for you to go from one plan to the other. You totally understand what's going to happen. I'm going to have a new ID card in hand so that I can go see my doctor or pick up my prescription on that day. And it's always the first of the month. So that might be a situation. Again, I get people saying, I'm thinking of retiring on the 15th of the month. Well, Medicare is not going to take effect for you until the first of the month. So we might have to go backwards to the first of the month that you're thinking of retiring in, or wait until the next month.
We always tell them 2 to 3 months. Go talk to you 2 to 3 months before.
I think it's
before it's that date or whenever you're going to pull that trigger.
Yeah.
You really want to get there in advance to make sure that you can spend the time with them too, and we're not kind of
right. It's not a bad idea though to push retirement out to the last day of the month so that my Medicare is going to be effective the first of the month, or that individual health insurance plan that we have to do is going to be effective the first of the month, so you can go right from one to the other. Now, the rules of COBRA, if you work for that employer that's 20 or more, they say that COBRA is going to notify you, the COBRA administrator will notify you, the employee, 15 days after you lose your coverage. So if you terminate on the 15th of the month and the COBRA administrator sends you that letter, you get it on the 31st of the month, you've got 60 days from the receipt of that letter to decide, do I want to do COBRA or not?
Right.
And then you got to pay the premium back to that termination date.
Okay.
So it's the only opportunity I'm aware of in the insurance industry where you can actually buy insurance after the fact. My house is on fire, I need to get insurance? Sorry. No. But I'm in the hospital.
Right.
I'm in the hospital, and I just lost my insurance, but I got COBRA. Yeah, it'll pay the bill.
You can go back.
You can go back.
How far?
Back to the date of termination.
Okay.
But you got to do it within 60
days
of that notification.
Okay.
So if you wait 61 days and say, hey, I need it to go back, sorry.
And you're on the gurney, you got a problem.
Yep, sorry, can't do it. Yep.
All right, well, let's not do that. Let's work in advance a little bit. That's really helpful. Gosh, I didn't know that.
For those people that are turning 65, they are going to get hammered with all sorts of mailings from the insurance industry. So the insurance industry, they get access to the people that are turning 65 from the federal government. And so they get that list, and if you reply to any of those mailings that you're going to get, your phone, again, blows up.
Is that SSA.com you were talking about versus
That's the same .com.
SSA.gov?
That's it. That's the same.
What is that? Is it just SSA.com versus SSA.gov? Is it just private?
Well, I don't know if it's SSA.com, but any .com.
Oh, I got you. Okay,
any .com that you reply to is going to. It's unbelievable. I mean, people say, I just replied to this thing, and my phone won't stop ringing.
I know.
It just rings all day long.
We've had the clients tell us that.
Yeah. So what I tell people all the time is throw the junk away, but you got to open it because the insurance industry tries to make their envelope look like the federal government's. It's official. You got to open this stuff. Well, I tell people, open everything. Look for that red, white, and blue Medicare card. If you don't find it, throw the junk away and keep looking. As soon as you find it, that's when you call me. And I'll be happy to help them with that.
Okay. So, Bob, we want to take an opportunity just to thank you for coming out today, sharing a lot of your insights to our clients. I mean, I learned a few things today, too, that will help us guide clients and as we structure their financial plan to make sure that coverage is in place. Because big mistakes can be made that can affect people quite adversely when it comes to their financial plan, their financial situation, if you don't know the rules, if you don't know what you're doing. So you need to get a professional like Bob to help you through that. That's why we've sent our clients to Bob, because he's going to sit down with you and make sure that you're okay. And he's going to do it on an individual basis, which is really important to us. So to take that time to make sure that you don't have gaps in coverage, the coverage is appropriate for you, and that it coincides with what we're doing on the financial plan. So even if you're not working with us, you're going to want to make sure that you have some professional that's helping you through it. You might think you know everything, but you're really going to want to be in front and work with somebody that's doing this on an everyday basis, because there's a lot of little mistakes that you can make and you might not realize it until it's too late. So Bob, again, thank you for coming out today, sharing your insights with us. And if you're not working with Bob already, you may want to consider giving Bob a call.
Thanks so much for watching, for listening, and for learning some valuable health insurance insights with Bob Golm and Roger today. If you have any questions about health insurance, our financial services, or finances in general, please check out our website, reinveltdavid.com, send us an email, give us a call, and of course, please like and subscribe to our podcast and stay tuned for our next episode.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed.